Good morning and welcome to our daily crypto news podcast. Today's episode is packed with some fascinating stories, including the ongoing saga between Burwick Law and Pump.fun, as well as some bearish signals for XRP. We'll dive into all that and more, but first, let's take a look at the top story.
That's right, we've got a real showdown brewing between Burwick Law and Pump.fun. As you may recall, Burwick Law proposed a class action lawsuit in January, alleging that Pump.fun was engaged in violating securities laws. Now, it seems the law firm is taking things a step further.
That's right. Burwick Law is demanding that Pump.fun remove tokens that are impersonating it. And I have to say, some of these tokens are pretty brazen. I mean, who comes up with a token called Dogshit2?
Well, I think it's safe to say that whoever created that token was trying to make a point. But in all seriousness, this is a pretty serious issue. If Burwick Law is successful in its lawsuit, it could have major implications for the crypto space as a whole.
Absolutely. And it's worth noting that Burwick Law isn't the only law firm involved in this proposed class action suit. There are actually two law firms working together on this case, which suggests that they're taking it very seriously.
That's right. And speaking of serious, let's take a look at the XRP price outlook. Unfortunately, it's not looking great. Traders are going short and exchange inflows are increasing, which is a pretty bearish signal.
Yeah, that's not what XRP holders want to hear. The perpetual funding rates remain negative, which shows a bias for bearish short positions. And to make matters worse, net inflows to spot XRP centralized exchanges turned positive early Thursday after days of outflows.
That's right. And when you combine that with the fact that XRP is trading below key support levels, it's a pretty grim picture. The immediate resistance is at $2.49, and there's more around the $2.60 level. So it's going to be tough for XRP to break through those levels.
Absolutely. And we'll continue to follow this story throughout the episode. We'll also be exploring some of the broader implications of the Burwick lawsuit and what it could mean for the crypto space as a whole. So stay tuned for more on that.
And if you're an XRP holder, don't worry. We'll be keeping a close eye on the price movements and bringing you updates as the day goes on. It's going to be a wild ride, so buckle up.
We were just discussing how global economic uncertainty has been affecting the crypto market, particularly with the recent decline in Bitcoin's price. Building on what we discussed earlier, it's interesting to see how investors are responding to these changes.
Exactly. And we're seeing a classic example of this with the current trade tensions sparked by President Donald Trump's tariffs. Investors are turning to traditional safe haven assets like gold, which has hit a new high. On the other hand, risk-on assets like crypto are becoming less appealing, with Bitcoin dropping below $93,000.
That's a significant drop of about 14% from its all-time high price set on January 20. It's clear that investors are weighing their options carefully, trying to decide between Bitcoin and gold, or even considering diversifying into both.
Speaking of diversification, it's worth noting that some investors are turning to alternative assets like NFTs and collectibles. However, these markets aren't immune to volatility either. Take the Pudgy Penguins project, for example. The price of their Pengu token has fallen significantly after the team burned over $150 million in Solana tokens.
That's right. The team decided to burn 13.69% of the total Pengu supply, which amounts to 16 tokens. This move was likely aimed at reducing the token supply and potentially boosting its value in the long run.
However, the short-term effects have been quite different. The token's price has dropped, and some users are expressing frustration on social media. Luca Netz, a prominent figure in the Pudgy Penguins community, defended the decision, stating that most eligible wallets had already claimed their tokens, and the only ones claiming now were bots running scripts.
This highlights the challenges of managing token economies and the importance of making informed decisions that balance short-term and long-term goals. It's a complex issue, and we'll likely see more projects grappling with similar challenges in the future.
Absolutely. As the crypto market continues to evolve, we'll be keeping a close eye on these developments and exploring their implications for investors, and the broader ecosystem.
Building on what we discussed earlier about the complexities of crypto regulation, we have some surprising news out of Washington. Senator Elizabeth Warren, known for her skepticism towards crypto, has announced her willingness to work with President Donald Trump and Senate Republicans to end the practice of debanking crypto firms.
That's right. This is a significant shift in tone from Senator Warren, who has been a vocal critic of the crypto industry. During a Senate hearing focused on allegations of debanking, Warren stated that debanking is a real problem, acknowledging the challenges faced by crypto companies in accessing traditional banking services.
It's interesting to see Warren's change of heart, especially given her previous stance on crypto. This could be a sign of growing recognition among lawmakers that debanking is a legitimate issue that needs to be addressed.
Absolutely, and this development comes at a time when the crypto industry is looking for clearer regulatory guidance. If Warren and Trump can work together to address debanking, it could be a significant step forward for the industry.
Speaking of significant steps forward, MicroStrategy has just announced a major rebranding effort. The company is dropping micro from its name and will now be known simply as Strategy.
That's right. According to the company, the name change is a natural evolution given its strong focus on Bitcoin. This move is intended to simplify the brand and reflect the company's commitment to the cryptocurrency.
This rebranding effort makes sense given MicroStrategy's significant investment in Bitcoin over the years. By dropping micro from its name, the company is signaling its continued focus on the crypto space.
And it's worth noting that Strategy will be reporting its fourth quarter earnings after the close on Wednesday, so we'll get a better sense of how the company's crypto bets are paying off.
It will be interesting to see how the market reacts to Strategy's earnings report, especially in light of the company's rebranding effort. We'll be keeping a close eye on this story as it develops.
And finally, we've got some concerning news from the world of cybersecurity. Researchers at Kaspersky have identified a cross-platform malware campaign that's targeting cryptocurrency wallet recovery phrases through malicious mobile apps.
That's right. The SparkCat campaign, as it's being called, uses a malicious software development kit to scan users' image galleries for sensitive recovery data. This is just another example of the kind of threats that crypto holders need to be aware of.
Absolutely. We've talked about this before, but it bears repeating. Security is paramount in the crypto space. You need to be vigilant about protecting your assets, whether it's using two-factor authentication, or being careful about the apps you download.
And it's not just individual holders who need to be concerned. This kind of malware can also pose a risk to institutions and exchanges. We've seen time and time again how a single vulnerability can be exploited and lead to major losses.
Speaking of major losses, the markets have been pretty volatile lately, but some analysts are saying that Trump's plan to lower the 10-year yield could actually be a boon for Bitcoin.
That's right. If the Trump administration is able to successfully control inflation and reduce fiscal spending, it could lead to lower yields. And lower yields, in turn, could make Bitcoin more attractive to investors.
Of course, there are no guarantees that Trump's plan will work, and some analysts are skeptical about whether it's even possible to engineer lower yields in this way.
But if it does work, it could be a major tailwind for Bitcoin. We've seen in the past how macroeconomic trends can impact the crypto markets, and this could be a big one.
So what are the key takeaways from today's stories? For one, security is still a major concern in the crypto space, and holders need to be vigilant. And two, the macroeconomic trends are still uncertain, but there are potential tailwinds on the horizon for Bitcoin.
And looking ahead to tomorrow, we'll be keeping an eye on the markets to see how they react to these developments. We'll also be watching for any further updates on the SparkCat malware campaign and any other security threats that may emerge.
Thanks for tuning in to today's show. Join us again tomorrow for more news and analysis from the world of crypto.
And don't forget to follow us on social media for the latest updates and behind-the-scenes insights into the world of crypto.
Until next time, goodbye.
Goodbye.